Every second, enterprise systems like CRM, sales and distribution, and convergent charging pump millions of raw transactional records into the backend. SAP Convergent Invoicing acts as a data reduction engine, distilling millions of microtransactions into single invoices and general ledger postings. The system splits this workload into two sequential phases: billing, then invoicing. Finally, data routes out to the financial ledgers and business warehouse. This reduction relies on a strict three-stage architecture. Data must pass through selection, then grouping, and finally aggregation. This exact three-stage funnel is mirrored in both the billing phase and the invoicing phase. While the theoretical structure is identical on both sides, the actual configuration and ABAP logic required to run them are distinct. Mastering CI effectively requires controlling how these filters operate across the billing and invoicing runs. The process begins on the billing side with selection. Here, the system is querying the database for billable items, or bits, that are unrated or pending processing. Administrators assign a standard selection variant at the subprocess level to define exactly which classes of billable items should be pulled into the current billing run. But standard variants rely on basic parameters. They struggle to accommodate complex enterprise exclusion rules, such as holding back specific records based on real-time external checks. When standard configuration falls short, developers intercept the system using event 8112. This function module allows you to write custom ABAP logic to check the selection scope and exclude complete processing packages before they ever enter the funnel. Now, look at the right side of the architecture. The invoicing phase also starts with selection, but the input data changes to a different object type. Invoicing does not look at raw billable items. Instead, it targets pending source documents. In the case of data coming from the CI billing run, these are category INVBI, or billing documents. Instead of a selection variant, you define selection control rules directly within the invoicing process to specify which source document categories are eligible. Selection scopes the raw material, bits for billing, and source documents for invoicing, and Event 8112 acts as the primary escape hatch for custom billing exclusions. Once the data is selected, it moves to the second stage, grouping. This is where individual data points are clustered into document headers. In the billing run, the selected billable items must be bucketed into billing units. The system naturally groups these based on shared traits, like matching business partners and contract accounts. Administrators dictate these rules by configuring a grouping variant. By ranking specific characteristics, like the creation date of the billable item, you force the system to group the items according to business requirements. Developers use Event 8114 to override these proposals. This intercepts the system to apply customer-specific logic before the final billing unit is formed. On the invoicing side, the logic mirrors this, but the scale is larger. Here, multiple billing documents are grouped together to form invoicing units. Invoicing grouping variants apply broader organizational rules. You might use them to ensure that source documents from different company codes are kept in separate invoices. The ultimate override for the invoicing grouping phase is Event 2601. Event 2601 allows architects to break standard invoicing unit proposals. This is critical for executing complex enterprise consolidation rules that standard variants cannot handle. Grouping builds the physical architecture of the document, using Event 8114 to control internal billing structures and Event 2601 to control final invoice consolidation. This brings us to the final stage of the funnel, aggregation. In the billing phase, aggregation is strictly about summarizing individual bits into fewer billing document items to reduce database volume. To execute this, you configure an aggregation variant and connect it to the billing process through posting area 8115. Once compressed, this structural billing document becomes the input for the invoicing phase. Invoicing aggregation performs the transition from billing data to financial records, translating summarized items into actual FICA posting documents. Because FICA operates as a specialized subledger, this translation requires a dual ledger posting, one entry for the general ledger and another for the business partner subledger. The first half of this financial translation is governed by posting area 2610. Posting area 2610 dictates the account assignments for the general ledger items, mapping out revenue and controlling data. The second half of the translation is controlled by posting area 2611. This area handles the account determination for the business partner subledger items, mapping the receivables and payables. Aggregation is the translation step where raw volume becomes financial value, relying entirely on the configuration of posting areas 8115, 2610, and 2611. Looking at the entire CI dual pipeline in motion, the fundamental logic of the data transformation becomes perfectly clear. In the first pass, raw bits undergo selection, grouping, and aggregation to output a structural billing document. In the second pass, those source documents undergo their own selection, grouping, and aggregation to output dual ledger FICA postings. The architectural boundary is specific. Billing manages rating and pricing data structures, while invoicing manages financial account mapping. While standard variants handle bulk operations, true control requires custom logic. Architects use event 8112 for billing selection, 8114 for billing grouping, and 2601 for invoicing grouping. At the bottom, posting area 8115 routes billing data, while 2610 and 2611 finalize the invoicing ledgers. Mastering SAP Convergent Invoicing means utilizing this dual funnel architecture to dictate exactly how transactional volume hits the final enterprise balance sheet.